Hi, welcome to this video day, 30th of January. We're on Sunday. This is our weekly Forex forecast. In this video, I'm going to pick out pairs for the up and coming week, which I think could offer really good risk to reward trades. Now, in terms of charts and the opportunities, we'll go and take a look at them in just a moment. Also, in this video, what I want to do is go through some entry and exit tips in terms of your trades. Now, in terms of a lot of retail traders, they struggle to catch big trends. They can't find high odds entries. And I think also a big problem, or a bigger problem than getting the entry, is managing the stock, placing it and then trailing it as a trend develops. Most traders cannot catch big trends. Now, in terms of the entry and exit tips, I hope you'll find them useful. I'll do them as I go through the trading opportunities. Now, what we will do is we'll go over and take a look at all the charts. Just one thing I need to stress before we do so, of course, is that it's my opinion as of right now of the charts. It can change in line with the market action. If you want to learn our trading strategy, check out our techniques and also see our daily technical and sentiment analysis of 14 FX pairs, including our exact entries, stops and targets. You can just click on the link beneath this video and you can get live access to our member center. Also, if you want to, you can follow our Facebook page. You can also join our Facebook group of traders and finally check out our recommended regulated broker. Now, I've just been doing some updates in our member center this weekend, so what we're going to do, use the charts from there. Let's go and take a look at them. Right, first chart is Euro USD. In terms of this pair, for anyone new to our videos, you can see we don't use a lot of trend lines. We want them kept to a minimum, only focusing on big levels. And also, when we're drawing our trend lines, we take into account volatility. Before we do our technicals, we've always got a bias of which way we're going to go from the sentiment behind the charts. Okay, where is the big money sitting? That then allows us to keep the technical analysis simple. Now, in terms of our bullish view of the USD, is to do with the direction of interest rates. You can go and watch my video I did on Wednesday if you wish, but we felt the Fed would be hawkish on Wednesday. A lot of people said they would be dovish. They couldn't be too hawkish because the stock market had gone down a bit. They wouldn't want to upset that. And also, US economy will peak out soon. Okay. We just felt that argument didn't add up because the Fed have to contain inflation. It's out of control. The Fed were hawkish, and you see a nice move to the downside. Okay. Now, in terms of this pair, so far you can see from our entry 114.40, we've got 300 pips, but there's probably about 650 more pips on the downside in our view. So offers a good risk reward trade for fresh trades. I'll go through how you come in to this one fresh, but I just want to go through how the chart has evolved in terms of here we had very choppy price action, and in our weekly forecast saying just not too fussed on trading the euro, nothing going on. But then it broke above 114. That was on the view that the ECB would raise interest rates this year. In our view, they won't. Okay, the Fed obviously, well, not obviously, the Fed will in our view. So we felt the breakout was false and we could sell on the red. Now, the reason we don't think the ECB can raise interest rates can be seen in this chart here, which is the ECB balance sheet, i.e. their stimulus. Look at the rate they're printing money. It's going parabolic, okay? Well, if you're printing money, you can't raise interest rates. And the ECB cannot stop printing money because they've got to support the poorer nations of the zone, such as Italy or Spain. If they don't, those nations will have a liquidity problem. Okay, so you've got the ECB printing money, the Fed are basically stopping their money printing and reducing their balance sheet. ECB doing the opposite. So that's heavily bearish for the euro. Now, in terms of this pair, obviously break above 114 failed. Then we travelled sideways a bit, down a bit. This candle here, before the Fed, was just below 113. We're saying it's worth selling a small trade and then adding to the position if 112 broke, okay? 112, big level. It's a big level on the monthly chart, which I'll go to in a moment. Now, in terms of where we are now, where would you sell? My own view is if we come up to 112, you could look for weakness of the level. If we go through the level, sell back through 112, okay? Or if we don't rally, just sell. Now, in terms of when you're doing your stop, you always want to have your stop out the way of an obvious level. Now, the obvious level is to tuck your stop behind the 112 level. The level's just broken. How many times do you see, poke above a big level, then it pulls back? Okay, just take stop. So have your stop behind second level. So we got ours at 112.50. Now, in terms of stops, obviously you don't want to be near an obvious level, but also you can stop yourself out if you've got a decent profit or take some profit. In terms of this one here, 300 pips, we'll take half in before the weekend and look to basically resell a rally. We'll get a better price, or if we fall lower, we're not going to miss out on much. We got some profit in the bank, which is a way to reduce the stress of trading in our view. So just heavily bearish of the year. And I want to go to the monthly chart. Snap the 112 level. There's 110. You can see why this is a big level of support. But things are so bad in Eurozone, we think we could get down to 105. Okay, and keep in mind Ukraine-Russia tensions, if they run out of control and there is some conflict or there's sanctions from the West, Putin supplies, or Russia does, a huge amount of energy to Europe, mostly to Germany. So if he decided to retaliate, that would obviously be very bearish for the euro. So the euro is looking like it's confirmed a big trend reversal to the downside. We shall see. Right, let's move to my next pair. And it's my favourite of the commodity currencies, which is USD CAD. Right, we're on USD CAD. Now, in terms of the last video I did, we had come through the 126 level. We've been long since 126.20 on this candle back here. I put the stop a little bit too close in my view. It was taken by a pip, which was really annoying. But we will normally play round numbers, as I stress in a lot of videos, and we'll just come back in at 126.20 on the exhaustion, and then she moves up to 127.66 settle on Friday. So it's basically an okay profit. You could take half in if you wish, and then wait to buy a dip back to the 127 round number, or a break of 128. Okay, now a lot of people say, well, Canadian dollar could get really strong if things escalate between the Ukraine and Russia, that standoff, because crude oil will soar. Okay, now if we look at crude oil, the USD's gone up anyway. Crude oil is extremely firm. Look at this. This is the monthly chart. If I go to the daily chart, it's been pretty strong, but the USD is going up. I think the reason for that is the market is already thinking crude oil could go to 100. Okay, so that's kind of in the price. Personally, I think if Russia did attack the Ukraine, it would go higher than 100, but that wouldn't help the CAD because the USD would firm on its safe haven status. Now, if I go to this chart, USD, sorry, I need the monthly chart. You can see how important the 128 level is. You've got effectively three bodies here, okay? You can see them, 1, 2, 3. You've also got a 20-month moving average. If that gives way, we should go to 130, then possibly up to 135, okay? So this one is going okay. I think we get above that 128 level, we could really start motoring to the upside. I'm hoping that 127 obviously holds the pullback. The CAD is the most overbought of the commodity currencies. Coming in fresh, buy off 127 on the strength or through 128. Now, in terms of other commodity currencies, let me go back to, where are we? AUD, USD. Right, in terms of this pair, we're just below the 70 level, which is a key level, okay? We've taken out the double bottom on the daily charts. And on the monthly chart, you can see how big a level it is. Bodies over here, where we found support, and this blue's coming through these bodies over here. If we can break 70, then I think we'll go to 65, so another 500 pips on the downside. Now, in terms of, again, we're bearish, but yeah, we've got to be mindful there could be a bounce in risk, so take half off, okay? Stop tight behind the second level, which is the high. If we want to put our second portion back in, we'd come through this low, okay? If we were stopped out, I personally think the Aussie could rally a bit up to this trend line, maybe 72. At this moment in time, I wouldn't be looking to trade it long, because I think it would just be a bounce and the risk to reward wouldn't be there for us, okay? So we'll see what happens around this critical level. Now let's go to another commodity currency, which is NZD USD. This one, decent entry, and then she rolls over quite nicely. This level here is a monthly support level. Then you've got 60. We're a bit oversold in the short term. So again, half off, put the stop back behind this level. You know, it is 300 pips, so that's in the bank. If we get taken out, we would give well over 100 pips back. But just what you got to do if you're following long-term trends. Now, in terms of, let's have a look at NZD USD on the monthly chart. You can see there's the 65 level, and there is the 60 level, okay? So, yeah, again, we'll see. Now I want to look at my favorite of the USD pairs, which is USD CZK. Right, USD Czech krona. Now, in terms of the Czech krona, we looked at this a few weeks ago when we said it looked a really good risk to reward trade. Look at that for a sell-off. I think from the highs about 5%. Why did we sell off so hard? The Czech krona was strong everywhere, okay? Basically, it was to do with the central bank. They raised interest rates to 3.7.5%, and the market thinks they're going to raise them to 4.5%. Speculators load up on shorts. Dollar already oversold. That's a good reversal candle, new daily low, strong close. Then we work our way sideways a bit, and then we start to gravitate to the upside. Now, I think this looks a great trade for fresh positions. Just come through the high, so through the 22 level, you'll take out these candle tails and bodies over here, okay? You only need to risk it back behind here. Got target, you can see my targets on the daily chart, and then up to daily highs, and I put a monthly target. That's long term if we get risk off kick in, which I think it could. It might not get reached, but even if we get up to first level, it's good risk to reward. Second level, obviously, a better risk to reward. Minor currencies, a lot of traders don't look at them. They very often will give you the best opportunities. If the euro starts to tank as well, that will hurt the Czech krona. Now, my last video, I'm not going to look at them in this video. I looked at the US dollar against the Polish zloty, PLN, and Hungarian forint, the HUF. USD is doing well there as well. You can see my other video from my views on those two pairs. Proxy is really good. Here's the one that's really moved, USD SEK. And what you can see is you fall down through the 9 level at the time. That was support. We think it's a false breakout. This little candle steadies up, coming on the blue with a tight stop, and she moves off to the upside really, really nicely. This one, I think, for fresh positions coming in is not as good as USD CZK, but just shows, you know, sometimes you can get good entry. When I say good entry, a low risk entry, and she really runs, okay? Where should we go next? Last USD pair before I do the yen. USD MXN. If I can get my page to move. Sorry, my page is stuck. Here we go. Again, a big fall down. I mean, come off a big support level. Obviously, we moved away from it, so I haven't drawn it in. But if you were to draw a line from here over to here, this is support, okay? Got two bodies there, brief poke below them, then the big blue pushes off, and then we're off to the upside. So get long. We've worked our way higher. I'm looking for hopefully more volatility to come in. We exhausted off the high on Friday. If we can get through the 2080 level, and nice blue on Monday, I think we'll be off to the upside. The stop can be tight behind this level. If we come down, I would look for the pullback to be a buying opportunity and buy strength. In terms of the emerging markets like the MXN, they're commodity currencies, so they're very sensitive to risk on, risk off. They're also heavily reliant on dollar funding. And the Fed is withdrawing stimulus, so we'll see if this one firms up. Now, in terms of what we're going to go to next, so we're going to look at some yen pairs. Right, Euro JPY. Now we're very bearish of the euro against USD and also against the yen. The yen just generally, we think, oversold in a number of pairs. Speculators heavily short, but we've moved in to a kind of risk-off environment, and that's normally good for the yen. And if it gets worse, the yen will really firm up. In terms of Euro JPY, if you look at Eurozone, how much money do the Japanese have in the zone? Huge amounts, and I think they're going to pull that back home, which will strengthen the yen. You're already seeing some strength in the yen. We're in at 130.50. Just when we couldn't get clear of the 131 level up here, we sold. That candle for us cemented the downtrend, tried to get above 131, then dropped through the next round number at 130, moved to the downside. So at the minute it's a couple of hundred pips, but I'm hoping that's going to get better. This is the key level, okay? 127.50, daily chart lows, also monthly support. If you wanted to be short, you could sell and then double up here and wait for this level to give way. I'll just show you it here. It's really these two tails and the 20-month moving average. If we can get through there, then it's down to this big support level at 120, which I think is about fair value for the euro. So hopefully, a longer term, 800 pips. On the downside, we shall see. Now, in terms of the yen pair that's got my biggest, or will have my biggest allocation, it's CAD JPY. We got a lucky entry at 91.70. We spike up, come back through, can't get up. Then we fall on the big red through 91. 91 now is holding rallies, and we're trapped between two round numbers. Okay, obviously I'm bearish of the CAD. So if we break below this level here, I'm going to say 89.80. You can see it there. Then we should go down to 86 and then 84, which is monthly support. I won't show the monthly support on this one. You go and look for yourself. But potentially 600 pips on the downside. So I've already got a trade in. I want to add on the break. I know on this one we exhausted back, but if we get through again, I just don't think we will. Okay, so looking for a breakout to the downside. Also, when you do an entry through a level which you think is big like this one, if it doesn't follow through, always take it out. Okay, do that quite often, but hoping we really follow through to the downside. Last yen pair before I look at some pound pairs, and another cross I really like. It's NZD JPY. Got in on the break of 78. We have moved down, and now we're just above 75, which is a key level. Again, for us, bank out 50%. I'll price it back in on a rally to 76, or on a break below. I'll put 75.80. I should put 74.80. That's a typo. So there's the 75 level, 74.80 just below. That should set up a move to 72, then 68. The Kiwi is pretty overvalued, actually, still, against a number of currencies, despite its fall. Okay, so the yen pairs I like. British pound. All right, GBP pairs. I'm looking at GBP NZD here, and yeah, I've been following this one for a while, since we broke 190, and we've moved up really well. Okay, so it's been a really big, strong trend. We've done 3 trades in this pair. It's about 1,400 pip rise, and we've got a good portion of it. Okay, I still think there's more upside in the pound. I think with the pound, yeah, I think the fundamentals are pretty strong compared to the commodity currencies, and I think if we get risk off, it really accelerates. The pound will do better than the commodity currencies. So I still think this trend has further to run. Now, in terms of entries again, we were long, and in a forecast we did drop below the 2000 level, and I'm saying just buy back through the level. 2000 is a big monthly level as well. You can see it's where we took out the previous daily highs over here on the left. Monthly level important as well. Just buy back through it if you're bullish. Okay, and we move up, basically 450 pips. But again, it's a good move. So bank 50%. Now on this one, I'm not going to buy strength. I buy dip to 203.60. So I want to see if she can dip to this first level here. Then I'll come in long. If she runs on the upside, it'll just be the small position that runs. Okay. Now, in terms of this pair, when like I said earlier on, some of our targets are ambitious. We're not going to reach all of them. You just need to get a few of them, and that will really make a difference to your bottom line profits. Now, in terms of the next GBP pair, it's GBP CAD. I'm hoping it's going to do what GBP NZD did and have a really good run to the upside. But we did correct down. Look at the scrappy price action. But look at these tails, okay? Tail there comes back. You get tail, makes a new near-term daily low, comes back, body's in line, then we push up and we're through the 171 level. I really like the look of this pair. I think we are going to go higher. If we can get above 171.30, so just clear out this 20-day moving average, get away from the round number for fresh positions, I think that's a buy. And I think we're going up to here, and then we're going on to 180 longer term. So I'm hoping this is going to do what GBP NZD did. We shall see. One pair to finish up with, and it's the kind of dog of the week for me anyway. AUD CAD. I tried a couple of trades in this actually with tight stops. Fall down here. There's a lot of speculators short. I think the AUD will be the strongest of the commodity currencies going forward. Come in long, get stopped out. Down again, come in long, get stopped out. Okay, there's small losses, but it's 2 losses on the trot, so to speak. Then we fall again really hard. Speculators will have built up an even bigger short position. I've drawn a support line on one candle. Why? I'm using the outer Bollinger Band as support. We very often use it as an extra support line. So I'm looking to see if this level holds. If we can break through here, you can see I'm going to go long with a very tight stop for a move, hopefully up to 91.50, then 93. If we run on to the downside and get through 89, I'll reset the entry. Okay, so there's some pairs to look at. In terms of entries and stops, we like aggressive entries, trying to catch the trend change. We will go for continuations. You saw in GBP NZD. Never put your stop at an obvious level. Okay, and rather than move your stop too close so we can get taken out by the noise. Okay, take in 50% or a proportion of your profits, which will smooth your equity curve. So that's the way I see entries and exits very briefly. Market last week overall for us was a good week. We'll see if we get a good week ahead. But that's the forecast for now. Thanks for watching it. Take care. Have a good day.